Well, welcome everybody. My name's Mark Littlewood. I'm the Director General here at the IEA. Congratulations for those of you who fought through traffic, broken infrastructure, protesters and everything else as I've just done. That's one of the reasons we're kicking off a little late, I'm afraid. Well, welcome to this IEA and Taxpayers Alliance briefing on the budget, which we've just heard this afternoon from Jeremy Hunt. I've just been giving my early thoughts on the Jeremy Vine show on Radio 2. I think there are a few things to applaud here, but the overall picture remains somewhat grim. And I think this was a steady as she goes budget broadly, but steady as she goes doesn't really seem to be cutting it. We've had roughly 0.5% GDP growth since 2010. The tax burden is the highest as a proportion of national income since Clement Attlee's post-war socialist government, although the Chancellor did say today that he expected that to fall. We are going to avoid a technical recession, according to the latest figures. Whether you believe them or not is a matter of individual preference, but we are basically flatlining. The figures 2 or 3 years down the line are very optimistic, as they always are. 2.5%, 3% growth is apparently just around the corner. We will continue to run a budget deficit until at least 2028. That will be 28 continual years of failing to balance the budget. So a pretty grim state of affairs overall, but I think a few things in the budget to applaud. On pensions, he has allowed contributions of up to £60,000 per annum and has completely removed the lifetime allowance. You could only pay into your pension pot until just over £1 million. You can now save as much as you want. His hope is that that will encourage those who have been saving for their pension and have quit the workforce to return to work. Corporation tax, as we anticipated, and one might say feared, is going up to 25%, but a policy that many in free market think tanks have argued for some time, namely full expensing on investment, has been introduced. Some substantial measures on childcare, but largely around subsidising it rather than deregulating it. So we'll see whether that works out. And the rebirth of investment zones. 12 are to be located across the United Kingdom. But on first blush, without having read the full detail, these seem a bit more like subsidy zones than investment zones. I couldn't quite work out what was being deregulated. Anyway, those are my early thoughts. Let me just tell you how this will work. We've got 3 excellent guests to give their initial thoughts on today's budget. Let me introduce them in the order in which they'll speak. First, we have Andrew Lilico of Europe Economics and an economics fellow here at the IEA. He will give his overview. Then delighted to be joined by Mike Denham, chairman of the Taxpayers Alliance. I think, Mike, you're going to look quite a lot on the spending side of the ledger, which is likely to shock and appall most of us in this room, I suspect. And last but by no means least, Emma Jones, CBE, founder of Enterprise Nation. And I'm interested to hear Emma's thoughts on the impact that this will have on small businesses in particular and entrepreneurs. I'm going to ask each of you to speak for maybe a little more than 5 minutes, but no more than 10. I'll start banging a glass when you get to 8 or 9 minutes, and then I'll start smashing the glass if you go over 10 minutes. Once we've heard from all of our 3 speakers, then I've got 2 or 3 questions I might put you, and then we'll throw over to the audience to hear your thoughts. So welcome again, and please give a very warm welcome to our panel. Andrew, the floor is yours.
Splendid. Have I got some slides? Right, yep. Splendid. Okay, so the OBR itself, to start off with how they summarise the budget, they wanted to emphasise that the GDP growth, big upwards revision for 2023 in GDP growth, been expected to contract quite a bit, minus 1.4%, now only contracting marginally, 0.2, well within the margin of error, basically flat for 2023. Inflation down a lot, so it's expected to fall much further to 2.7% by the end of the year. From 10.7% to 2.9% by the end of the year, I think it was. I haven't got it on this slide for whatever reason. And borrowing scheduled to fall as well. So that's how they summarised it. Next, there are big growth upgrades. And this is perhaps the area of which is most interesting to me. Big growth upgrades, and a big difference between the OBR and the Bank of England has emerged here. So you can see on the slide that GDP growth for 2022 is catching up still from COVID, large rise, 4% or so. 2023, we have been expected to contract quite a bit. Now we're basically level. Bank of England also thought we were going to be contracting a little bit, so not a large difference there. Then you look for 2024 and 2025, and here's where things get interesting. So we get this quite large upwards revision compared with November, and that was compared with the Bank of England expecting a contraction again in 2023. Then we get now quite what you make of that Bank of England figure, because that's the Bank of England with market interest rate expectations. So that's probably part of the way the Bank of England was suggesting that market interest rate expectations were wrong. 2025, you then have about the same, and then 2026 and 2027, you see that the growth is slightly lower. Now, at the back end of the period, so not much of that effect is to do with a difference in view of policy. So the OBR does think that you get some positive boost from the policy measures in the budget, particularly the labour supply measures. They think adds 0.2% to GDP by 2027-28, and they also think that you get a big boost to business investment, as we see here in the next slide, from the change in the corporation tax measures which they describe. So here we have, you see there we have the forecast line in yellow. That's what they expected business investment to do. And now with their switch to full expensing, they expect there to be more in the short term, a little bit less rise in business investment over the longer term. One kind of interesting thing to me there is that basically, so Kwarteng not raising corporation tax from 19 to 25% was expected to cost £18 billion. Hunt's full expensing measure is expected to cost £9 billion, which I guess means that one Hunt equals 0.5 Kwarteng. But for all the talk of how terrible it would be, what a dreadful policy that Truss was supposedly had by not raising corporation tax, Hunt has decided he can do half of what she did. The budget deficit is now scheduled to fall faster than in November. The total and net debt marginally lower. But you can see, for all that Hunt was talking about these 3 percentage points lower national debt, even compared with March 2022, the outlook for debt is still dramatically. Basically, those top three lines are all much of a muchness, and there's a big increase in the debt since March 2022. If you look at the left hand, that's on the right hand panel as you're looking there. On the left hand panel, you see that the pre-measure line, the dotted line, is a little bit below the with measures line, the blue line. That's because you get about £20 billion of fiscal relaxation in each of the first 3 years. So that's the sum. That's mainly the combination of the energy price guarantee and a few other smaller things. The extension of the energy price guarantee and a few other smaller things. The energy package is now scheduled. So there was talk back, you'll remember last September or so, that maybe the energy package might be costing 100 billion, 160 billion, 200 billion. There were those sorts of things. Some people said, well, it would be daft to try to have some kind of OBR. Some people sitting not very far from here might have said it was daft to have an OBR statement based around the idea that it was going to cost those numbers because things were too volatile with the Ukraine war and energy markets and so on. And if you tried to say, well, we've got to now have some matching fiscal consolidation, then either you were going to be vastly too much or vastly too little. I think it would have been madness to have had an OBR statement and a detailed fiscal plan in September when they announced the energy price guarantee, because there was absolutely no idea of how much it was going to cost. And we can see that illustrated in the fact that now it's scheduled only to cost £47 billion even after the extension. So it's 41.6 in last year and 5.4 in 2023. Much less expensive than feared. Still a lot of money they shouldn't have been spending. I think it's a mistake to extend it. They extended it by 3 months. The rationale for extending it appears to be that their forecasts are that the that the price cap would go below the effective 2,500 guarantee level by June. So then you wouldn't have the households experience any rise. Problem with that is, suppose that energy prices in financial markets, I mean, who knows? Suppose that the Russians make some breakthrough or whatever, or something else happens and the prices go up again. Do people think that the government will be able, if it gets to June and the prices are looking like they would go above 2,500, to then withdraw the measure? The fact of the matter is that they've made themselves now, I think, hostage to fortune, that they can't really withdraw that. And that's one of the key errors, was part of the reason why there was the problem in financial markets in last September, was that Truss's measure was basically open-ended and she was never going to be able to withdraw it. And once you start extending it, you run the risk that eventually you fall into the situation where you can't withdraw it as well. So I think that's a bad error, and they should have just bitten the bullet straight away. Unemployment scheduled to peak at only 4.4%, down from 4.9%. I mean, it's a remarkable level of that you would have such a downturn, and then it's the UK's labour market over the past more than 15 years, just absolutely incredible through the period of the Great Recession, through the period of the stagnant growth afterwards, and now we're coming through into another significant period of economic turbulence. And we just don't seem to have remember all those days of 3 million unemployed and 12% unemployment and all that kind of thing. Just isn't the UK anymore. The OBR expects that, so one of the big things that, apart from the corporation tax changes and the business investment impacts of those that Hunt announced, were a whole series of labour market reforms. I mean, we say reforms, a lot of them really involved spending extra money, right? So it was lots of targeted extra money here and there, though some of them were tax breaks of various sorts. Even the pension allowance, the removal of the cap on that was, which people had thought was going to go to 1.8 million from 1, and they removed it altogether. Even that's really best understood as an incentive for older workers to come back into the labour force. You got quite a lot of people, particularly over 50, withdrawing from the labour market in the COVID period, and the government thinks it could get some of those back. And it would be nice if they could. The OBR expects these labour market reforms to boost employment by around 3%, 110,000 people. It reckons they'll be below average earnings, partly because they probably work reduced hours. And some of the people, if they're higher, they'll probably be higher earners, above average earners, if they're older workers, but they're probably going to be not working full hours. So they think that only adds 0.2% GDP. Seems rather not that big an amount, but the OBR points out this is the largest upwards revision we've made to potential output within our 5-year forecast as a result of fiscal policy decisions taken by our government in any of our forecasts since 2010. I don't know how pitiful a comment that is on the government's fiscal performance since 2010, but anyway, there we go. There were a few other interesting things. I quite liked the allowing of recognition of US and Japanese medicine decisions and various things like that, but it's smaller stuff. And then there was all the usual stuff about beer and so on that you get in budgets, because that's quite fun. Few other comments. So I think all bets are off on any of these economic forecasts if a major bank collapses. We already had a couple of smaller banks collapsing in the US. Credit Suisse was in terrible trouble today. If Credit Suisse is one of the 9 bulge bracket international investment banks, it's an officially globally systematically significant financial institution. So it would be a bad problem if that were a significant economic issue, if that were to collapse. But so who knows? Will the extension be right? And the last thing I would note is that a lot of the positive boosts here, as well as a lot of the spending cuts as per last year, still remain to be after in 2025 onwards. So I think as things stand, it looks very unlikely that Hunt will either have the burden of doing them or the benefits of whatever these things are that happen.
Andrew, thank you very much indeed. Could I just ask you to move slightly towards me, Andrew, because I'm conscious that our speakers are, we can show the slides on YouTube for our audience, but I'm hoping that people in the room can see them as well. So thank you very much, and for sticking to time. Mike, over to you.
Okay, thanks very much, Mark. Well, I've already got my first slide up here by the look of it. I think the first thing to say is there were some bits in this budget, as Mark said earlier on, that I think we on this side of the street, as it were, welcome. I don't suppose it will surprise anyone to hear that our major concern is that Hunt really did nothing about reducing the burden, the overall burden of taxation. And we still have the highest level of taxation relative to GDP, as Mark said, for 75 years. And we are very much in the camp that I suppose Liz Truss and Kwasi Kwarteng were in, that we believe that we are not going to be able to generate robust, sustainable, long-term growth unless we reduce that tax burden.
Yeah.
Where we perhaps differ from them is, while we welcome tax cuts, we can see a pressing need to tackle the fundamental problem, which is that we're just spending too much, or the government is just spending too much. And what I want to talk about is the burden of spending, what we call the cost of government crisis. And I'd like to start with this chart, which is a very natty chart that the OBR started producing a few reports ago. And it shows total public spending as a percentage of GDP going back 100 years. And there are a couple of things to pick out about this chart. The first, quite obviously, you've got two big spikes, two big peaks at the start, which are the two world wars, which is fair enough. We were fighting for survival, etc., etc. But the next peak is the COVID peak. And I think one point that's just worth making about that before we go on is that that COVID peak really represents the result, not so much of the COVID epidemic, but the policies the government chose to pursue in order to tackle that epidemic. Now, you know, hindsight's a wonderful thing, but they closed down the economy and they had to pump a lot of money in to support incomes and businesses through the period, and also tax revenues were hit. So that explains that thing. It was a policy type peak. Anyway, one point you need to note about this chart is that the left-hand side has been compressed. As we economists say, it's been scrunched up. The scale has been scrunched up. So there's a break there to the scale for the more recent years to show things more clearly. So it looks a little bit unusual. But the next thing to emphasize about this chart is that back in the 1990s, the average percentage was, over the decade as a whole, was 36% of GDP taken up by public spending. In the noughties, we obviously had a Labour government, and the percentage went up to just under 40%, which is kind of what you'd expect given what we remember as Gordon Brown's spending and all the rest of it. And then we came to the 2010s. Now, this was the age of austerity. People still talk about the age of austerity. Actually, the percentage of GDP taken up by public spending went up again to an average of 42% over the decade. So there's this continued upward drift. Yes, there are peaks and troughs, but we've been pressing up quite a long way. And this year, on Hunt's current plans, which admittedly don't cover the whole decade, but on our estimate, and I'll come back to that later on, we think that in the 2020s, the percentage will end up at the average percentage will end up at just under 45%. So there's been an inexorable upward movement through this period, which is very concerning. Now let's just talk about Hunt's budget. So what has he done here? Well, you need a microscope at this point, really, to work out what's going on. This is the OBR forecast, and if you can probably see the captions here. We've got first of all the outturn, which goes up to there. Then we've got the March 2020 forecast. So this was done just before the COVID incident, just before Ukraine and so on. So that was more or less flatlining there on 40%. And since then, we've had the spike, and in March 2023, on pre-budget measures, well, they're more or less all the same. So you've got November, you can't really see the difference on this chart, so I won't go into it. Suffice it to say that in November, what happened to public spending under Mr. Hunt was that he actually increased public spending. Far from recognizing there was a public spending problem, he actually increased public spending on various measures. He did implement cuts in the final 2 years, and I'll come back to those in a moment. But overall, he increased spending. And what he's done again this time is to increase it even further. I mean, it seems absolutely staggering, but that is the case. He's actually added to spending. Mark talked earlier on about some of the subsidy measures that have been taken and various other things that he's done. I mean, you know, we've got a continuation of quite substantial energy price subsidies. We've got a continuation. We've got the introduction. Well, not the introduction. We've got the expansion of childcare subsidies coming in now, and it's all pushing up on spending. Now, it is true, and if you look back to the 90s, if you look back then, so it's not a surprise to see that public sector employment has been increasing on quite a rapid trend. So over the last 5 years, the headcount of the public sector as a whole has gone up by around 500,000, and it's still going up. We had new figures yesterday, and it's still increasing. Productivity in the public sector has fallen quite sharply since the beginning of the COVID epidemic. The ONS reckons it's fallen by around 7.5%. So we've got increasing numbers, falling productivity. Now, Hunt back in November did actually say that he was going to squeeze public spending in the far years. He decided that instead of assuming that departmental spending would rise in line with money GDP, which is the conventional forecasting assumption that is used by the OBR, he was going to cut capital spending. He would freeze it in money terms, so they'll actually reduce it in real terms. And he has stuck with that in this budget. On the current spending, departmental current spending, what he did was to say that he was going to reduce the real level of growth down to 1% per annum, which again is lower than GDP was forecast to be, but still an increase. Now, the key point there is that although it was presented as a kind of cut, current spending being 5 times capital spending, overall it was still an increase. So, you know, it's presented as a cut, but actually if you look at the money being spent, it's going on up. So, so that's what he's done in this budget. The question, obviously, is whether even those modest spending cuts, can he actually deliver them? I mean, as we've just been hearing from Andrew and Mark, you know, he's kicked the ball forward through to pass the next election. And in theory, there should be a proper spending review next year because it's due, because the previous one that was done by Rishi Sunak in 2021, 3-year deal, runs out next year. So in theory, there should be a proper and full spending review next year. Well, all I'd say is don't hold your breath with an election coming up. And the suspicion must be that they're going to kick it to the other side of the election. And he's just going to try and pass all of this off. And I guess if they lose the election, it's Rachel's problem. So, you know, it's not down to him. So, you know, really, as has already been suggested, the public spending plans further out, I think we have to take with a huge pinch of salt. Now I'm going to switch on to my next slide, which is my last slide, very quickly, and just take this a little bit further to try and underline what a serious problem this public spending issue actually is. What we've got here are the two figures, the figures I mentioned earlier on, average public spending as a percentage of GDP in the 90s, 2000s, 2010s and 2020s. And what we've done is to splice onto the end of that the OBR's longer term forecasts for public spending, which were produced last summer. Now, it may not be entirely right because we've had to do a bit of splicing, but it's not. This is basically the picture. The pressures on public spending going forward from demography, in particular our aging population, and also some other factors like that poor record of the NHS on productivity that I mentioned, and a number of other factors, mean that even on however much you tweak the assumptions, you end up with a picture of public spending rising towards 60% of GDP in 50 years' time. Now, okay, I won't be here in 50 years' time, but you know, this is the background against which Hunt is making these public spending decisions now. We understand that he has an election coming up, but really, I think as taxpayers and indeed people living in this country, we need to be concerned by the fact that he has not tackled the big problem that he has in the public finances, which is excessive public spending.
Mike, thank you very much, and for keeping to time. Last but by no means least, Emma, are you going to give us some grounds for cheer, or are you as worried as your other two panellists?
Well, I thought you were going to say, am I going to give you some slides, which sadly I'm not. So you should never start a talk by apologising, but I am slide-less today. But it was interesting, and thank you, Mark, for inviting me. Hearing Mike speak about can we reduce public sector, size of the public sector in terms of spend and people, I will never forget, and this is a very young audience, so you may not even have come across this man, but there used to be a guy called Steve Hilton, who was head of oh, okay, people do know of him, those kind of chuckles. I know he came back for Brexit, but I was heavily involved in a campaign called Startup Britain that was kind of endorsed by the then Prime Minister David Cameron, and it all got up and running by this chap called Steve Hilton. And at the time, my company, Enterprise Nation, was based at Somerset House. And for those of you that know Somerset House, it's just this kind of beautiful space. And Steve Hilton, and this was kind of infamously said that this is what he did, came over to Somerset House to measure it up, to say the size of government should be that you could fit everybody from government into Somerset House. And I think you probably need a fair few of them now. But I'm not here to talk about property. I am here, as Mark says, to talk about the view of small business on today's budget. So just by way of brief introduction, I run a business called Enterprise Nation. So you hopefully know what I stand for by the fact of the name of the business, is that we stand for, can we have a great enterprise nation? So we support about 800,000 small businesses each year. So businesses come onto our platform, they get lots of resource and they get lots of support. And the line that we've just come out with on today's budget is essentially saying what was in it was very slim pickings for small business. So I'd love to cover kind of what they did get, but also what they didn't. But I suppose just to give some context, I think one thing that's changing in the UK is the small businesses that we represent are very much the small end of small. So the Enterprise Nation community is made up of businesses that tend to have 0 to 10 employees. But of course, these businesses make up the majority of businesses in the UK. 6 million plus of them. That doesn't even include the number of people who are running what's called a side hustle. So entrepreneurial activity where people are keeping hold of their day job, running a business at nights and weekends. If you look at those estimates, essentially 10 million plus people either running a small business or undertaking some kind of entrepreneurial activity. And I think what we're seeing in government policy is a clear distinction between the kind of high growth tech VC fueled businesses. I was in a WhatsApp group this weekend called Save UK Tech, which was the whole response to the Silicon Valley Bank kind of fallout. And there was rapid movement from the Chancellor, from the Treasury, from the Prime Minister to save the UK tech scene. And this is where we're seeing most of the enthusiasm and most of the activity lie. So again, if you look at numbers in the UK, there's a number of scale-up businesses. So what are referred to as scale-up, the high-growth companies, is round about 30,000 of them. So the body of small businesses I represent, there's kind of 6 million plus operating, lots of side hustles in addition, and then you've got these 30,000 scale-up businesses. Most of the policies today were focused on the scale-up businesses. So the reason why we say slim pickings in terms of what small businesses did get, there is an element of access to talent. Lots of businesses are started by women at the moment, again, very small businesses. So the childcare activity, again, we did a live small business reaction on the Enterprise Nation blog, and lots of female founders saying, this will help me get more time to build my business. So that was a welcome contribution. Less work, less time with the kids equals more time at work. What that does for family balance, I'm not quite sure. The 50 plus talent, I think, is a really interesting opportunity. This is something we've been looking at for some time. And it's really interesting in terms of unemployment and employment rates. We do keep on saying to the government, there's this huge enthusiasm and insistence on let's try and encourage people who are 50 plus to come back into the workforce. With unemployment so low, one of the things we're saying is, well, maybe there's people who are 50 plus who want to start their own business. Again, kind of today's budget was very much for workers. It was very focused on employment. I don't think there was a single reference to self-employment. And we're big believers in, rather than getting people's jobs, why can't people create their own jobs? But back to things that small businesses got. They have got access to talent in terms of saying good childcare benefits that were offered today, and this absolute push to say, let's get the 50 plus workforce back into work. Mark mentioned the investment zones, so there's 12 of them. They're each going to get 80 million spent in them. For some, businesses in those 12 areas, that's quite a good thing, but it's very much a postcode lottery, because if you're not in those 12 areas, you don't get access to it. And actually, just another observation on that is, in announcing those 12 investment zones today, what the Chancellor has done, and successive governments have done this, is change again the business support landscape. So years gone by, again, I don't know sort of average age of people if you remember this, but we used to have what were called regional development agencies. Then they became what have most recently been called growth hubs and local enterprise partnerships. Today, the Chancellor said, right, local economic decision making is about to move from local enterprise partnerships to local councils. So for small businesses, we've got to change again in terms of how business support is delivered. And I suppose we have a question, are local councils set up to be the ones to deliver the support to local businesses? When it comes to tax, and I know we've already kind of said the full expensing, which of course is good news. Any small business owner likes to know that if they pay for IT kit, that they can kind of claim that back. But at the same time, there was bad news on R&D tax credits. So again, the Chancellor's announcement today is R&D tax credits is now pretty much only available to businesses who are doing at least 40% of their work is pure research. That takes out most of the small businesses who have been benefiting from R&D tax credits. The reason the move has been made is because the Chancellor is saying there's been lots of abuse of the system, but if you talk to many small businesses, they've hugely benefited from R&D tax credits, and as of today, that's disappeared. So tax-wise, not good, and that doesn't even take into account that the corporation tax, as we know, is going higher at that 25%. So what was in it was the access to talent, the investment zones, an element of good news in tax in terms of the full expensing. What wasn't in it, which kind of concerns us possibly more, is, and the Chancellor kind of started the budget by kind of saying to all of those naysayers of our economy, the economy is kind of growing incredibly well. If you look at our small business sector and digitisation, we are actually falling behind. So there is something called Making Tax Digital that the government introduced a couple of years ago. The government is actually slowing down the introduction of Making Tax Digital. So it was first of all introduced for businesses over the VAT threshold. It has done a brilliant thing to force small businesses to adopt cloud accounting software. That's made them more productive. It's made them embrace digital tools and technologies. Government was then due to introduce Making Tax Digital for those on income tax self-assessment. That has been delayed. There's been no statement around when that might be introduced. So we are slowing down as a country when it comes to small businesses adopting digital tools. Whereas if you look in other countries like Spain and Australia, their governments are coming out with programs like Digital Kit, where they're giving vouchers and inducements to say to small businesses, let's help boost your digital skills. Sadly, the UK equivalent of that, which was a program called Help to Grow Digital, I don't know how many people kind of observe and watch central government small business support programs, but it was introduced and then about 6 months later it was closed for business, and we could spend a whole session just on that very program and why it didn't work. So what small businesses didn't get was any kind of thrust of the Chancellor saying, right, let's make the most of the digital opportunity to ensure you grow. And nothing on exports, which kind of makes me so sad, because kind of the Brexit freedoms of helping small businesses who literally have put EU trade on pause for the past 3 years, nothing in the budget today, even though there is some sort of more in the details, there is talk of making customs documentation more straightforward. But we are desperate to see an export boom. And actually, the last time I came to a Taxpayers Alliance event that John was chairing, Liam Fox was talking about our relations with China, and I was kind of questioning, you know, where has that kind of trade relationship gone, where British companies bought from China using amazing platforms like Alibaba, sold our goods back. We need to, whether it's with China or not, we need to bring back that kind of Britain is great, anything made or designed in Britain is great, let's sell it to the world. Nothing of that today. And I guess the final thing, which we're always big proponents of, would have loved to heard more mention of it, is enabling small businesses to sell to government. So the SME procurement agenda. When Matt Hancock was Minister for Cabinet Office, feels like a very long time ago now, he then set a very ambitious target of saying central government should spend £1 in every 3 with small businesses. His original target said that target should have been hit in 2022. Government is not yet at a point of saying that 33% of spend is with small businesses. So as I say, I kind of go back to slim pickings for small businesses, and just as a very final comment on that, every time I hear budgets like today, I feel that what the UK government needs to look at is almost having separate strata and policy for different businesses. What was announced was for scale-ups, high-tech companies, good announcements for them. But in the US, and actually I've got a full day tomorrow with a UK-US Small Business Summit, loads of people in this city right now who've come over from the States. One woman who used to run something called the Small Business Administration. So in the US, they have different policies for businesses respected to their size. So Small Business Administration takes care of businesses with 0 to 10 employees. The rest of the US government takes care of the higher growth. And I think it's time now, when we see budgets like today, which gives nothing for the rump of businesses that power the UK economy, maybe it's time to just reevaluate and say, maybe we need dedicated policy and dedicated people looking at just this community, because we're relying on them to keep powering the economy so we can keep those jobs and keep the investment allowances going.
Emma, thank you very much indeed, and thank you to all of our panellists. I'm going to kick off with a few questions, then we'll come to the floor. I know we've got a microphone at the back. Andrew, let me start with you. You pointed out on your slides you mentioned the uncertainty of growth forecasts, but also the divergence between them. I was quite surprised to hear these rather optimistic growth figures for not this year. We'll technically avoid a recession. I mean, I guess we were flatlining this year, but sort of the sunlit uplands are a mere 2 or 3 years away, right? And if you can get that growth ticking over nicely, I guess a lot of these wider problems are mitigated. But I must admit, I'm somewhat sceptical. I'm not a forecaster. In fact, about 7 or 8 years ago, I think it was, when a Treasury official came to meet me here and asked what I thought of the OBR's growth forecasting. And I said, I'm going to be honest with you, the IEA doesn't have some complex algorithm, but I take Robert Choate's numbers from the OBR, halve them, and round them down a bit, and I find that leads to a more accurate prediction of the future than his own raw numbers. To which she replied, "That's very, very interesting. Robert Choate is my husband," which rather took the wind out of my sails. But how seriously or not should we take those growth figures? So obviously the difference, if we can get long-term growth back to 2 or 3%, doesn't solve the sort of problems that Mike and others are saying. My God, it mitigates them. If you take a dimmer view that we're going to keep crawling along at 0.5%, well, it gets grim indeed. Can we pull back Andrew's slide on this?
My slide?
Sorry, just on growth figures.
It doesn't matter. Any of my slides, I can move between them once it's up. But, yeah. Right.
There you go.
Now, one thing I think to note is that there's still quite a bit of scope for catch-up post-COVID. So the UK's growth position still isn't terribly happy compared with where we were prior to.
Because we're just making up lost ground.
Yeah, there's quite a bit of lost ground to make up. So, and then you add into that a lost year here, then you've still got quite a bit of catch up to make, and you're still going to have, if you have your 10-year average, only 1% and a bit. So, although these numbers might look, not too.
It's recovering lost ground in the main.
A fair bit of it is recovering lost ground. And if you were going to be recovering, then you'd probably be wanting to be recovering up here, really, rather than, this, like getting your, whatever it is, 1.8 or something, and then you're still only 2% over there. That's not really very happy. So I would say that those growth numbers are still,
not great.
I'd say that they're not that good. And obviously, who knows what happens after the general election. One thing to say about some of these things is, though, that stuff didn't turn out as bad on the energy situation as people thought. So that whole thing didn't turn into as bad a calamity as people thought it might. Furthermore, the inflation situation is looking a little bit more positive in 2 ways. One is that it appears, at least at this point, like we've not had as much of a mortgage a kind of consumer meltdown in response to mortgage rates going up, as people had thought that there might be. And in general, if you went back to last year, a lot of people were talking about interest rates peaking at something like 6%, certainly well into the 5s. I always thought that was a bit fanciful. They're now thinking they're going to peak at something like 4.25%. And that makes a huge difference. And that's part of what's going on, by the way, with some of these Bank of England forecasts. So when the Bank of England's been putting out forecasts indeed since last year, and people were talking about, what was it, like an 18-month recession and stuff like that. Basically, that was the Bank of England really saying, you've got your interest rate forecast completely wrong, because none of that recession was ever going to happen because it was associated with absolutely plummeting inflation. And they were trying to communicate that for quite a long time, and eventually financial markets have caught up. So I think that quite a lot of this story is some of that.
Yeah,
It's that things have not turned out, stuff that might have turned out really bad, have not. But a thing that I would say, and it's a large but, is we've already seen two kinds of things, fairly significant, associated with some normalisation in interest rates. We've had the LDI problem in the pensions market, and now we've had two American banks fall over, and there might be more banks to fall over yet. And a period of sustained higher, normal, not high, just low but normal interest rates, after you've had more than a decade of rates at essentially zero, there are going to be other shoes fall off. And it's just, there are going to be all kinds of other problems that are exposed by that normalization process. So I would say, if you get these numbers, that probably means that nothing too bad happened. It's a healthy process, the normalization of interest rates, and it will eventually mean that those things start being up here for a period, but you might need a bit more turbulence than we're showing in these numbers yet.
I think it might also just be worth mentioning that full expensing on corporation tax, and I haven't looked at the detailed numbers, but I think what it's done is to bring forward some of the investment spending into those early years.
Correct. You can see that here.
Yeah.
Right. So you see that both you get extra investment in here, but less over here.
That's right.
So that's part of the reason why you get the growth numbers lower on the OBR.
It's a one-off effect, basically.
Yeah, it's a shift in time. I'm not, by the way, unlike others on this panel, I'm not a fan of full expensing. I know that there are some, the ASI and so on, they were keen on that. I don't see why, say you're a small business and you're a small business that rented your machines. Why should why should there be a distortion which says if I rent my machines, I'm a lot worse off than somebody that buys a machine?
Yeah.
I don't see why that's a good idea.
I think we'd much prefer a reduction in the main corporation tax rate, and I think there is some evidence that is more effective in terms of bring multinational investment into the country as well.
Yes, these other things, what they tend to do, stuff like full expensing or whatever, is that they move stuff around in time.
Yeah.
Right, that's the kind of thing that you have an effect.
Tinkering.
And that's part of the reason why the government often ends up with these complex allowances, is because it tries to manipulate investment through
when
time
things
as part
happen.
of macroeconomic management,
Yeah.
and then it finds it hard to back out of them, so they hang around for a while, and you get all kinds of weird distortions. I think that the process which Osborne was engaged in of getting rid of the allowances and cutting the headline rate without actually there being much impact on the total tax take because you change the base, that was a better way of doing things.
Well, I was going to say, and businesses would prefer that because it's simplification.
Absolutely.
And I got a sad email, and I know this was the previous budget, that the Office for Tax Simplification has closed, which again...
They've done their job. They
haven't. Because there's
Mission accomplished.
There's a conversation about VAT at the moment, because we have a current small business minister who feels that VAT is a cap on growth. So our current VAT threshold is £85,000. But then you get into a discussion of, well, should you lower it so you enforce businesses to register for VAT as soon as they're formed, because then it makes everybody competitive? Or do you increase it from 85 to 150,000 because then businesses will continue to grow up until there? So, but then this argument comes in, then you've got EIS relief, and what it does do is it drives small businesses into the arms of accountants, which is no bad thing, but the complexity and the tinkering of taking one, putting in another, just creates confusion for small businesses when they've got other things to be concentrating on.
Makes your budget speeches longer then.
Yeah. Mike, let me come to you. I wonder if we could pull up Mike's slide of the growth in government in state spending as a proportion. This one. No, back one.
The bar
back
chart.
One, back one, the bar chart.
The bar chart.
Back one. That's it.
There we go.
So now you very fairly said this is very speculative looking forwards, but we're by the 2060s. I'm not planning to be around by then either, Mike, just like yourself. we would be touching, all things equal, which of course they won't be, but all things equal, state spending being nearly 60% of GDP.
So East Germany was 65.
East Germany was 65. The former Soviet Union was 70 by most estimates.
Yeah.
you know, we're well on the way. Probably by the 2070s or the 2080s, we've actually got there, won't we?
Yeah, I mean, you know, yes, these forecasts are speculative, but the OBR has done a perfectly sensible and professional job in trying to pull together the evidence that we do have, and looking at not just numbers, population numbers, but also, as I mentioned earlier on, things like NHS productivity, which, and interestingly, when you look at the NHS projections, what you find is that, or their projections at any rate, and I've no reason to think that this is necessarily wrong, what you find is that though the aging population is important, there's no doubt about that, and since I'm part of it, you know, I think they are important. Although they are important,
we're all aging. We're all aging.
Yeah,
the same rate.
Aging more than others, though, Mark. But anyway, yeah. So although they are important, other factors like productivity and like the fact that you know, the pharmaceutical industry and the medical tech industry keep dreaming up fabulous new treatments that cost an arm and a leg. I mean, they've taken account of all of that, or they've tried to take account of it. So I think these are realistic forecasts, and basically, you know, they raise the sort of questions that politicians, and I understand, you know, this is not easy stuff that politicians tend to dodge. And one of the big questions facing this country is, what are we going to do about the NHS? Because looking on a longer term basis, it doesn't seem to be sustainable. And, you know, some solution along the lines of the European social insurance type systems, you know, with some degree of co-payment, giving people more responsibility for their own health spending, I think is actually inevitable. And of course, the other thing is this, you know, when you leave things, and sorry, do stop me if I bang on too long about this, Mark. You know, if you leave things in the hands of our politicians and Whitehall, you end up with these prolonged strikes of the kind that we've got now. You end up with all sorts of dysfunctionality, you know, rationing, strikes, and all that sort of thing. Yeah, you get strikes in the private sector as well. And yes, doctors on the continent sometimes go on strike. But we seem to really have a problem with this now.
Another point to raise to attention, I think it was Matt Lesh, our Director of Comms and Public Policy here, who dug this out from OBR numbers. Oftentimes in a budget, it's what's not said, so there's no change to the income tax thresholds. I think this means another 2.5 million people will be dragged into paying income tax, and more than 3 million people in 5 years' time will be paying either the 40p rate or the 45p rate, which they wouldn't be if it was going up on that. But Emma, before I go over to the audience and catch my eye, if you'd like to ask a question, you were mentioning the difficulty for small businesses and the complexities of the tax code and this shift of now you'll have to be working with your local council rather than your local enterprise partnership. Much harder to quantify, I guess, but very little here in terms of deregulation or supply side reform that you might think would assist the entrepreneur, making it easier to just go about business without having to fill in forms or a compliance survey or get some local regulator or agency on side before you can move. Are you disappointed in how little we're deregulating?
Well, no. So actually, we're actually still a good country when it comes to starting a business. So one of the arms of government I love is Companies House. You can start a business for 15 quid going on to Companies House, even though lots of people are calling for that to change because there's a lot to be said that there's a lot of people who are dead who have registered companies on Companies House because they're not legitimate people. So it's kind of one of those things, when you make it so easy, that means it's open to abuse. So when it comes to regulation, we're doing okay. So ease of doing business is relatively good. Where ease of doing business starts to clog up, a couple of huge issues for small business, again, wasn't referenced today, but I wouldn't expect this to be referenced in a budget. One is late payment. Absolutely criminal how bad this is getting for small businesses. So kind of onboarding into supply chains. And this is not just small businesses trying to sell to big companies, it's small businesses trying to sell to anyone. So there's a lot of friction at the moment when it comes to getting paid because just payment terms are getting so much longer. In good ways, there was a good announcement around AI. There was talk today of creating a regulatory sandbox. And actually, we're doing an event. I don't know if I'm allowed to mention this in the hallowed halls of this institute, but we're doing an event with the Tony Blair Institute at the end of April. Oh, okay. Like literally, this is why I don't understand this world. There were like hisses, I think, just then. But you probably
You only need to look at Mike's chart. Everything was great under Blair.
Yeah,
compared to
well,
what's happened since.
and so, but,
I don't think we could have him back.
but very interestingly, he came out with this paper with William Hague, which I just thought was really interesting, of kind of two behemoths, I guess, from the political world coming together to kind of set a new vision, a new purpose, I think the document was called, for the UK. And there was so much in there for small businesses. Government should see their data as an asset. They wholeheartedly should, and I'd love to see them kind of opening it up so small businesses could invent new things on the back of it. Government should enable experts to come into government to do jobs. We all remember the vaccine task force when COVID hit, and it kind of did this phenomenal job of getting the vaccine out quickly. So many people have said that's because a VC scientist was put in charge and was kind of taken away from government. So it had the autonomy to function. So this is another recommendation they've put, is bring in entrepreneurs and experts from outside of government. And I guess it's just, that's the kind of final point on this, is we have long held the view, and I'm sorry to sound like a massive Steve Hilton fan today, but he wrote this amazing book called More Human, which, I mean, is a very fat book, but in essence, what More Human said is the closer you are to your constituents, the better you can serve them. And this is the one thing when I go into 1 Victoria Street to see Bays As Was, DBIT, whatever it's now called, is you go in and you try and help as someone who is very close to small businesses, hearing them every day, and there is an absolute kind of disjunct between the policy that's being created and what small businesses want. And I guess that's the ultimate of what we'd love to see, is, dare I say, just closer engagement, policy people either being small business owners and entrepreneurs or definitely having lots of contact with them, because you just make more sound decisions if you know the life that they're going through. It's basic kind of UX. So know the problems that the businesses are having, build a solution for those problems.
Great. Any questions from the floor? I've got a whole range of more questions. So let's take the microphone here, if you wouldn't mind introducing yourself.
Yeah, Andy McDonald from the London Financial. It's kind of a question for the whole panel. We haven't had a proper budget in about 17 months, but comparing it to the November kind of Kwarteng mini kind of budget, what would you rate this one out of 10? And again, on that same scale, what would you rate the Kwarteng budget out of 10?
There you go. I always ask the questions of demanding that people rate things out of 10 about how optimistic or pessimistic they are. How would you rate this one, Andrew? And what's its comparison to the mini budget that clearly, blew up?
Let me see. I think it strikes me as a very ordinary sort of a budget. So I don't think it's like one of those. It's not like a Geoffrey Howe 81 or 82, or like a Nigel Lawson one. So I wouldn't have it up there. On the other hand, I wouldn't say it was a catastrophe of a budget either. So I'd like to have it as a 5 out of 10.
And how would you compare that to the mini budget in retrospect?
I mean, the mini budget wasn't a fully specified budget. The mini budget had good things and catastrophic things in it. I think energy price guarantee was a terrible idea. So I would probably put the mini budget at a net 7. So I think the thing about the mini budget was that it although it had some bad things in, which gave it a problem, it had plenty of good things and aspirations. The one other thing I would say about that is that most of the good things about that were the announcements of these, whatever it was, 8 or 10 growth
investment
areas.
zones. Yeah.
No, not the investment zones. No. It announced that it was going to have these 8 or 10 policy areas where they were going to do supply side reforms, which we never got. So the best thing in the mini budget was the stuff that
was a promise of something that never happened.
Right. Stuff that never happened. It wasn't really about the fiscal measures at all.
Yeah.
Mike.
Okay. Well, it is a difficult question. I think starting with the current budget, I guess, and Andrew sort of says it was a ho-hum budget, sort of in the middle. At 5. I'd not one off that, so I'd put it at 4, because I'm so concerned about the fact that he hasn't done anything about the overall tax burden or overall spending. As for the Truss Kwarteng budget, well, as Andrew said, it had some good things. I mean, at the TPA, we love the idea of going for growth by cutting taxes. So from that point of view, it was great, but it left out something in our mind that really couldn't be left out, and that was the spending side. So again, I don't think I would give it quite as high mark as Andrew. I would probably be down. I'd probably say again around a barbell, maybe 4 or 5.
Yeah, I think the criticism of the Truss Kwarteng government was that they went for unfunded tax cuts.
Yeah.
But the criticism I'm making of this government is they're going for unfunded tax rises if corporation tax is on the wrong side of the Laffer curve. Emma, how would you rate this one and compared to the short-lived, didn't get off the launch pad Kwarteng?
Which I thought was a great shame. So my comments are based on tone and presentation. So the mini budget, I would give 10 out of 10. We watched the mini budget as we did today, live small business reaction. And our comment following that one was, we have never heard the word entrepreneur, enterprise used as many times in the past decade as was used in the quasi-budget. And our statement was, economists will be debating about this budget for months to come, but that was incredibly enterprise friendly. Anyway, of course, then however many days later, everything blew up. So we loved it for the confidence it gave to entrepreneurs and small businesses that said, you're recognised, we value your contribution, we're going to grow this economy so you can keep growing. It was amazing in that kind of tone. And today, I guess what I'd give 10 out of 10 for today is it was very technical, it was very long, and it just kind of, to me, it's style, it's just the different styles of the kind of personalities involved. That even when the Prime Minister at the beginning of this year, when he did this, I'm going to stop the boats and kind of gave his promises, and I went to this event in East London, maybe there were other people there at Here East where it was held, and again the Prime Minister, who I of course have huge respect for, but he kind of said, right, I'm going to stop the boats, I'm going to get the NHS working, I'm going to grow the economy. And I remember a guy from Channel 4 stood up and said to him, you are technocrat Prime Minister because you know so much of the detail, it's so technical. So I guess I'd give that 10 out of 10 for its technical elements today, but small businesses don't need technical elements. They need a cheerleader and they need someone to kind of boost the confidence and give them the prospects of growth that they need. So the mini budget for me got 10 out of 10 for that.
My God, you talk about grade inflation there. You're easily pleased. 10 out of 10 for the mini budget, 10 out of 10 for this one.
Can I just add one thing, Mark? I mean, what I said about the Truss Kwarteng budget, I mean, the TPA overall welcomed very much that sort of, attempt to wrench us out of this sort of high tax, low growth setting. And what I said to other people in the TPA at the time was that, years and years and years and years ago, I worked at the Treasury for my sins, and you can take the boy out of the Treasury, but you can't take the Treasury out of the boy. And I'm afraid, it left me very much personally as a deep fiscal conservative. I want to see funding in budgets. Mm-hmm. So that's a personal view.
Yep.
Of course, it wasn't really a budget.
It wasn't really a budget. That's a fair point,
which is
Andrew.
why it didn't happen.
That's a fair point.
Again, please introduce yourself for YouTube and our audience.
Hi, Christian Calgi from the Daily Express. So it appears low tax Conservatives have formally lost the battle on corporation tax. So do you just accept failure now and accept the crumbs of full expensing? Or do you have to wait for the increase in corporation tax to start hurting the economy before once again calling for a reduction to the current rate? And the second part is, what actually gives you hope at the moment, given we know everything really about Jeremy Hunt? Has the Labour Party said anything that you think might fix some of the issues the economy's facing? Do you think Hunt will eventually come round to the pro-growth agenda, or can Tory backbenchers secure enough free market concessions?
Really interesting question on the corporation tax thing. The reason I made that sort of slight joke about unfunded tax rises is, I wonder whether we will get stories of the AstraZeneca type. I appreciate that they actually said that was as much about the NHS levy. It wasn't specifically corporation tax, but there's obviously a multitude of regulatory and fiscal decisions that go into that relocation. But Andrew, what's your take on this? Is the battle on corporation tax, if you like, over? 25% is the new normal? Or do you think there'll be unfolding stories of, well, we were going to open this in the UK, but now we're going somewhere else that might yet lead to that being withdrawn? And then, very fair question about the stance of the official opposition. Do you think there's actually much difference between the two front benches now? Had Rachel Reeves delivered the budget today, would we have heard something remarkably similar? And if there are differences, what are they, Andrew?
So on the corporation tax question, I mean, 25% isn't that high, neither that high historically nor that high internationally. It would probably be better to have been lower, at least for now, because probably I probably would never have cut it as quite as low as 19% in the first place myself. I think the whole saga of the corporation tax is just a whole bizarre thing. When it was announced it was going up to 25%, I don't think that Boris Johnson, for example, ever assumed that would happen. It was announced some years ahead in the context of Joe Biden trying to get international agreement of a minimum rate of 25%. And we said 25% because we didn't want to have an argument with him at the time. The whole thing of that international 25% has subsequently collapsed, as everybody knew it would. And I think that the assumption was, well, we were never going to get around to doing it. It then ended up with this thing we were never going to do. That ended up being part of Truss's flagship policy of saying that we're not going to do cut. But even that, the point of that was we weren't going to be raising it to 25% now because we were in the middle of a recession. So that was the point of the not raising it to 25%. I think she probably would have thought it was going up, but perhaps not as far as 25% eventually. There was also a funny thing of the 19 of something to do with, for some reason in people's head, it should be a similar rate to the income tax, even though that's really nothing to do with anything. I think that it's all very, very political. I don't think that if you had sat probably anybody across politics or any economist down from scratch last August and said to them, and it hadn't been announced that the corporation tax was going to go up, and you'd said, do you think corporation tax should go up from 19% to 25% next April, just as we go into, just as the economy's contracting? 100 out of 100 of them would have said no. Right? Nobody actually thought that this was a smart idea to raise it. And I think one of the other things to see today is that Jeremy Hunt completely accepts the logic of that. He doesn't think you should be raising corporation tax by £18 billion just as you go into a recession. So he did it, he halved. He found a way to halve the number. Now, what you would have done under other circumstances was to have said, well, we're going up from 19 to 22. But of course, that would have been politically embarrassing. So he didn't. So instead, he invented this expensing thing. But that's what's happened here, quite blatantly. They never intended for it to go up as much as they'd originally announced. The politics then made them do it on the headline terms when they wouldn't otherwise have done it. So they've invented a fix. It's all silliness. Just so
very quickly on Labour.
On Labour, go and see my Spectator article with 14 growth-friendly policies for the Labour Party. And I think that Labour will actually, what Labour will do is that they will come in, the Conservatives have allowed a whole load of things to fester for a very long time. Labour will come in and make them all worse, but they will at least change some of the things that need to be changed. So I think it's quite positive. Labour's going to engage with planning, it'll engage with certain things on the Constitution and so on. By and large, it'll make them worse, and that will then force whatever party replaces the Labour Party, comes in the next general election, replaces them as the government, or some general election down the road, to come up with some better alternative to just not changing anything, which has been what the Conservatives have done for the past 13 years.
Mike and Emma, very briefly, I'll take one more question.
Okay, well, very quickly, I mean, I broadly agree with everything Andrew has just said on this. I think on corporation tax, we at the TPA will continue to press for a lower rate of corporation tax. And going back to that chart that I showed you, the bar chart of the growth of spending as a proportion of GDP, part of the problem there is that our long-term growth rate is too low to support anything like that kind of burden of spending. And one of the ways that this country can go about trying to lift the long-term growth rate is to increase our capital stock. And the way to do that, or one of the ways of doing that, is to reduce corporate taxation. So I think we've definitely gone on doing that. As for the Labour Party coming in, well, I mean, personally, I think Rachel Reeves is a sensible person to be doing the Chancellor's job. I mean, she's obviously got views not exactly the same as mine. She's a sensible person to do it, but I agree with Andrew. I think they'll come in and make a number of things probably worse. And who knows where we go from there. So I'm not hugely optimistic. I like some of the things they've said about cutting down public sector waste. Whether they can actually deliver on it, of course, is another matter.
Emma, you're looking forward to giving 10 out of 10 to Rachel Reeves?
Well, I was going to say, mine was just going to be a very brief comment on Labour, that one of the things the Chancellor said today is he wants London to become a more attractive place for companies to list, because this is another thing, is there's lots of companies. So back to these kind of, will we hear stories of businesses say, I'm not going to invest here now? There's lots of UK companies saying we're not going to list on the London Stock Exchange, we're going to look to America. And interestingly, Labour have just done something called the Startup Review, looking at exactly the same topic. So what we're seeing in the small business world is, and you'll have seen all about this, Labour is engaging more. They are looking at the topics. I think they would have said something today about high streets, business rates, your everyday business owner. I think there would have been more emphasis on that from a Labour government.
We're right on the clock. I've got one more question unless there's any from the floor. No others from the floor. I'm just going to finish by asking, usually if I ask for a very short question from the floor, somebody puts their hand up and says, how would you solve the Northern Ireland problem, or something like that, which is indeed a short question. Do you think, I'm going to ask each of the panellists, do you think when we're back here in a year's time, things will look rosier or bleaker? Let's assume it's still Jeremy Hunt as our Chancellor of the Exchequer then. Andrew?
About the same.
About the same?
About the same.
So I'm an entrepreneur who runs their own business. Ever the optimist, definitely rosier.
Definitely rosier, okay. Well, I'm delighted, delighted to finish on an upbeat note. If you're watching us on YouTube, please make sure you hit the like button and the notification bell and subscribe to the channel so you're kept abreast of all the IEA London's YouTube output. My thanks to our friends at the Taxpayers Alliance for helping us put this briefing together. But please join me most importantly in thanking our panellists, Andrew, Mike and Emma. Thank you very much indeed. Thank you. Enjoy the rest of the afternoon.